to Money Talk Viewpoint, the podcast for financial professionals, CPAs, attorneys, wealth managers, and trusted advisors who service the high net worth and family office. My name is Stuart Cruz. I'm going to be your host here. I'm president and founder of Cruz Asset Management. I'm a TEDx speaker, and I wrote a book called License to Steal: How to Turn Wall Street Greed into Your Gain. For those who are not familiar with Cruz Asset Management, we're a boutique asset management firm and virtual family office, which we're going to get into in a little bit. We service high net worth individuals, and we have kind of a unique proposition, which is why we have our guest on the show, Jeff Cline. So a virtual family office is where you would go to collaborate with other financial professionals, because most clients out there, they are stuck with the task of working with their different experts individually. They have to go to their wealth advisor, then their estate planner, and their CPA, and their insurance guy, and whomever else, and they have to wade that world on their own. So we bring all those financial professionals together so that they can work collaboratively on behalf of the client. And that's what a virtual family office is. So that's why I'm so excited to have Jeff on the show, because he's part of our virtual family office arena and one of the trusted advisors that we have at Cruz Asset.
Material that, it should be addressed immediately, investigated immediately.
I do want to go back to that point, because I do have a personal story about that, the cyber crimes. And, it's been said that if you haven't been affected by it, it's just a matter of time. And from personal experience, so here I am in the world of finance, and you can imagine, are pretty protective of our clients' money and how money gets wired out. And from a personal experience, my assistant got an email from me that said, please wire money to Cruz Asset Management account. And these other people had opened up a Cruz Asset Management account in California with Merrill Lynch. And so he wired money from a Cruz Asset Management account to another Cruz Asset Management account. And didn't even require a signature, because it was same name registration, right? And he got a spoofed email from me, and he, in passing, said, oh, the wire went out. And I said, what wire? He said, the wire you asked me to send. And I said, he was just trying to do his job, right? So he did nothing. He didn't do anything wrong as far as he knew. He got directions from me. He saw me in the office. I was busy. He was just trying to take care of business. And it was just the wrong place at the wrong time. And now, of course, I called Merrill Lynch saying, hey, I'm Cruz Asset Management. And they're like, do you have the EIN number? And it's not the same number, so they won't even talk to me now. They have the money. Now, of course, I said, look, I understand all the regulations, so just please put a hold on that for a moment, and why don't we let our back offices talk? And I ultimately recovered the money, but it's a rarity that happens, right? So it was just super fortunate that it happened, and they weren't able to wire the money to the next place, or else I'd have been out those dollars. So
we had a client who was working with a builder. And we've got so many stories of where someone has received an email instructing them to send a wire, and they feel it's completely legit down to the way the person speaks in the email, way they sign off, and then boom, they send the wire. So it's a thing. There's no doubt about it.
And now it's scarier, which from a compliance standpoint, it used to, and it still is actually, a request of when a client asks for a wire to go out, I have to check a box to say, did you verbally confirm with that client? And of course we say yes, but now with all the AI, and my understanding is you only need about 3 to 5 seconds of somebody's voice where you can emulate their voice. And even if I verbally confirm with them, it may not actually be them, right? They say, hey, please send the wire out. Here's the number to verbally confirm. You call them up, and now AI answers the phone inconceivably what their voice is. I don't know what. We're going to have to go back to like code words. You have to use Rumpelstiltskin or Rochambeau as a code word to send a wire out.
I mean, I think in our quest for more and more convenience, I think something's going to have to give. And I think at some point it's just going to have to be more complex to send money around.
Yeah. You have to be okay with that to protect the money.
Yeah.
So, I'm probably guilty. I know I'm guilty of this, but I haven't reviewed my insurance in a while. Like, how often do you recommend people review their insurance, take a look at their policies, go over them?
If they've never had someone do a comprehensive review, that, you know, everyone should do that. And that is just have someone just look at all the policies in the program, not just, you know, one policy as it comes up for renewal. So I would encourage that as, you know, that's, you know, that's a good checkup that all of us should do. And then, you know, someone should be, you know, looking at that every year and, you know, providing that insured with, you know, either recommendations specific to, you know, the renewal offer looks good, and confirm that there's been no changes with the family that weren't disclosed throughout the year because we're not mind readers.
Yeah.
And then also at that renewal, you know, there should be, you know, if the incumbent program has lost touch with the market from a pricing or coverage perspective, you know, then you'll go back out and either validate that the incumbent program is still the right fit or that a better option exists. Typically, prior to the insurance market going a bit haywire, you know, our average was once every 3 years for our clients. You know, we were going back into the market to validate what they had. These days, we're reshopping everyone every year. And it doesn't mean like there's a lot of people moving carriers. But, you know, when you got people getting 20-30% rate increases, we definitely have to go through the effort of validating that's still the right carrier. And oftentimes it is, unfortunately, these days.
So tell me more about that 20-30% rate increases. Those sound like crazy numbers. So are you getting those in Florida because of hurricane, or what? Like, what's driving that price action?
We're getting those in every state. So it's really, you know, it's really a countrywide issue, and the rate increases are indiscriminate. Claims, no claims. You know, it's a rising tide that's lifting all boats. And there are certain, those states that I was mentioning before, where I was saying get on the homeowner's insurance early if you're buying a home. I mean, it's a real crisis. I mean, you've got people going up 100%, 150%. You've got a tremendous amount of non-renewals happening in those states. So people being forcibly displaced from their insurance company for no reason. So
what's driving the price increase?
So that's a whole nother podcast in and of itself, but I'll try to be very succinct.
Okay.
So a lot of it has to do with, you know, the unquestionable and undeniable increase in catastrophic weather events. And typically what got reported were the hurricanes. You know, back in, what was it, 92, Hurricane Andrew, you know, the biggest national or biggest natural catastrophe in the United States. And that really was the focus. Where now pretty much all you hear about are California wildfires in the West. You know, that wildfire that happened in Boulder like 2 or 3 years ago that took out like 1,100 homes, which is a huge event. It was $1 billion event, over $1 billion, which is a big loss event. That state, Colorado, wasn't even mapped for wildfire by a few of our carriers. And had there been 1/8 of an inch of snow on the ground, which there would have been, that wildfire would have never happened. So, you know, a lot of the situation in the West has been drought specific. You know, because of the drought, the prolonged drought in the West has allowed for these increasing fires. The other complicating factor is you've had significant increases in population density in these types of areas.
Okay.
For example, Idaho. 5 years ago, only 5% of homes built in Idaho were considered wildfire exposed. Now 35% are. Montana is another great example where you've had just this population explosion, which just basically puts, more dollars at risk. These fires have been happening for a long time, and so have these hurricanes. And then the third thing, and I'm gonna wrap this up, is the increase in convective storms. So these are wind, hail, tornado. And that's become such an issue here in the Midwest that many insurance companies are not writing new policyholders that have a wood shake roof. And that has to do with the propensity of damage associated with hail specific to wood shake roofs. So you've got, kind of these weather patterns, changing not only the carrier's appetite, but their whole approach to underwriting. And then I can go even deeper on kind of the regulation that insurance is regulated by state. And there are some states that are very pro-consumer, where it's difficult for insurance carriers to get rate increases approved. California is one of those. So, there's pressures from a lot of angles that are driving these rate increases. And it's probably going to be sustained for the next couple of years.
Okay, that's great news. Appreciate that. Here, my perception is insurance companies are making all the money. That's like Warren Buffett's thing. Like, I'm going to buy insurance companies because they're just collecting premium, but apparently they're not making as much money as we thought, or at least they're having to raise their premiums. So what role does, like, buying insurance, the obvious answer is obviously you're protecting your assets, but what broader role does insurance play in the estate planning and legacy planning for the affluent families and those kind of people? Like, obviously you want to protect assets, but do you work closely with estate planners and lawyers, that aspect, or what are your thoughts on that?
I think I think with respect to estate planning, one of the big exposures, our families have is their personal liability. You know what it's going to cost to rebuild the house. You know what it's going to cost to replace a car or a diamond ring. What is harder to predict is what it's going to cost to settle an auto accident where there's significant injury to third parties and you're personally negligent.
Yeah.
And it continues to be these days. I mean, we've been talking about rate increases and hard to get coverage and all that sort of stuff, which is all true, unfortunately. But it continues to be one of the most efficient transfers of risk in the property casualty insurance universe, a personal umbrella or excess liability policy. And effectively what that policy is designed to be is a moat between some plaintiff and plaintiff's attorney that's alleging you caused them significant damages and your personal assets. Mm-hmm. So the minimum that we recommend is $5 million. And these days we're kind of pushing that up to 10 million. And then you can kind of get into reasons why you would want to go above that. But effectively, that is an estate planning tool. Yeah. Because its specific purpose is to shield assets from litigation. So I think that's the biggest.
All right. So given your experience and the fact that you've lived your career in insurance, do you have any advice for people looking to enter the business, especially those that are trying to service the high net worth and family office space?
Yeah. I mean, if you've got a passion for service, you enjoy building relationships, long-term relationships, and you're willing to work hard, it's a really great business because there's a lot of need. Yep. And again, back to, the majority of the insurance industry on my side, are conditioned to, just be transactional. So, and that is what we've already talked about, Stuart, is not what our clients are looking for, yours or mine. So I think it's a great opportunity for someone who's got, the right kind of skills and interests.
Yeah. All right, and like final question before we wrap up, and looking ahead in the future, are there any things in the landscape that you see that are outside? Obviously, premium was a big one. Is there any changes in legislation? I don't know, political parties changing that you think might change the landscape of the insurance industry coming up?
Yeah, I think there's definitely going to be some things that have to give because, you can't just keep shoving more rates down people's throats. Certainly for our types of clients, they generally have the financial ability to say the transfer of risk is no longer efficient and I'm going to self-insure.
Yeah.
And we're already seeing that in varying degrees with clients in like, I'm not going to buy wind in Florida. I'm going to self-insure wind, as an example.
Yeah.
So I think, there are going to be some changes, and we've already seen one in Florida late last year that was specifically designed to address homeowners insurance fraudulent claims. And there were a couple statutes out of the books in Florida that were very pro plaintiff's bar, wherein insurance carriers had to reimburse legal fees of an insured whose claim they denied if the insurance company makes a settlement. So there's one domino that has fallen. And that is we're already seeing news and getting reports from our insurance carriers that that's going to have a positive effect. But, states like, California, Texas, there's definitely, in my opinion, some regulation that's really hurting the market. So I think that's going to have to be addressed at some point.
Is there anything else that you wanted to give advice on, or some best practices for people in the high net worth space that they should do? I mean, review your policy annually, you said, have a comprehensive understanding of how your insurance works together, work with other professionals. Anything else that you might want to have a good takeaway from this discussion?
I feel like I'm starting to turn on the fire hose, but I think like I hit all the high points. I really want to thank you, Stuart, for inviting me on and for the relationship we have with your firm. And, I hope this was interesting.
This was great. Jeff, can you tell our viewers how to get a hold of you?
Sure. Just, bcurisk.com, B as in boy, CU risk.com. That's probably the easiest way to, learn more about us and schedule a consultation if you're so interested.
Sounds great. Well, I'm your host, Stuart Cruz. That was our show. I can be reached at cruzassetmanagement.com. That's KRUSE, assetmanagement.com, or Stuart@cruzam.com. You're watching Money Talk Viewpoint, financial education podcast that's geared towards the high net worth and family office space. If you're interested in becoming a guest on the show, please reach out to moneytalkviewpoint.org. My name is Stuart Cruz, and it's been a pleasure to have you on our show. Jeff, thanks so much. And thanks everybody for watching.